Is Good Day Philadelphia.
7:36. We are starting to see some movement in the housing market, and part of this is because the FHA loans, these government-insured loans, now make up about 25% of the market.
Of course, before you buy, though, there are some things you need to know about these FHA loans. Vince Ingui, president of Levere's Mortgage, is here. Good morning, Vince. Thanks for being here.
Good morning, gentlemen. Thanks for having me back.
All right, let's talk about this. These loans, primarily, not in all cases, are for people who can't put the 10% down. Your income can be lower, and you might be able to buy more house. This looks to me a little bit like the ingredients that got us in this mess.
You got us.
What's different?
Similar smell. Well, here's what's different. The loans that are not performing or that are delinquent at this point are typically loans that require less money down, okay? More so 0% down versus the 3.5%, which is required by FHA. They were no document or stated income or liar loans, if you will. And those extended to not just primary residences, but second homes and investment property. So you had the speculative person with no money and maybe no income buying property. With FHA, there is some money that's involved. It's still 3.5%. There is a full underwrite, meaning that you have to prove your income and your assets to qualify. And there has to be, I think, something to allow people to get into home ownership. You don't want to get too aggressive, and you don't want the pendulum to swing back too aggressive again. But you know, it's still a fully underwritten loan.
I'm just curious, though, and my concern is, can people get homes that they really should not afford?
Yeah, and that's the case, I think, for a lot of people. I mean, what you qualify for or what your lender will tell you you're approved for, you know, you may be left with just being able to afford tuna sandwiches at the end of the month. So, you know, what you qualified for and what you ultimately can afford. I mean, your lifestyle does not show up on your credit report necessarily. You know, how many times you go out to eat on the weekends.
But I thought there were going to be much tougher appraisals. No?
Appraisals are, they are tougher, and they're being scrutinized much more closely than they were before. Before, if an appraiser put a value on a report, it was pretty much accepted.
Yeah.
Now you have underwriters that are overlooking it. Obviously, on our end, we're doing our due diligence to make sure the appraisals are adequate, but appraisals are getting more tough.
More fees, though? Or not?
For FHA or for appraisals?
FHA.
Not necessarily. FHA has what's called an upfront MI premium, which is typically about 1.75% of the loan amount. That's typically the biggest difference as far as fees are concerned.
I'm a seller. I want to get rid of my house. Somebody comes up, potential buyer, and I know they're going to have an FHA loan. Should I have any concerns?
A few years back, yes, because FHA appraisals were very stringent. You know, if you had a crack in your sidewalk or if you had a dent in your deck, and realtors used to want to stay away from FHA loans because they were such a hassle. Nowadays, the conventional appraisal guidelines are about the same as FHA.
Okay.
If you have some chip paint around some windows or doors, you're going to have to paint that. But aside from that, it's a solid loan, and it shouldn't be too concerned.
How do you see the rates going over the next few months?
I think from now to the end of the year, we're probably going to stay about the level that we're at now, which is, you know, in the low fives. The Federal Reserve has committed to buy $1.25 trillion worth of mortgage-backed securities. That ends on December the 31st. So be very interested to see once they stop purchasing if it's going to be a complete cold turkey stop, which means, you know, rates, in my opinion, can go up as much as a half a percentage point on a typical 30-year, or if it's going to be a weaning off and allow things to gradually go back. So hopefully.
Vince, thanks for